China is continuing its economic reforms, now making it easier for foreign businesses to set up shop in the country. Related measures introduced in the Shanghai Free Trade Zone have been made available to other parts of China, helping to cut the amount of time it takes to register a new business.
It may cover an area of just 29 square kilometres, but the Shanghai Free Trade Zone could be just the place where dreams are made. Introduced 5 months ago, it's been China's test bed for introducing a freer market and broader economic reform. Since opening, the number of businesses angling to be registered here has spiked. More than 6,600 enterprises have now registered, 6,100 domestic and 510 foreign funded.
When I worked outside the zone, I used to deal with around 10 business registration applications every day. But here in the free trade zone, I need to work extra hours because the numbers of applications and the business seeking advice.
The pilot zone aims to encourage investment in China by facilitating a freer market economy and streamline processes for registering businesses here. The time it takes to register a business has been slashed from the national average of 29 days to just 4. A number of requirements have been dumped or no longer require central government approval, essentially making it simpler to register a business in China.
Business owners no longer have to shuffle between various government departments to get a bunch of documents approved. Now they can get all business codes, tax, and the customs affairs ready in the one place.
For those thinking of branching into China, you're in luck. The minimum amounts needed to register businesses have been scrapped. In theory, a grand bank balance of 0 is needed to set up a limited liability, one-person limited liability, or joint stock companies with limited liability.
Originally, I had to register with paid-up capital, but I might not use up all the money even 1 or 2 years after the registration, so a lot of capital went unused. Now I don't need to invest all the capital at one time. I can decide for myself how much I provide and optimize the use of my money.
The reforms have companies from the United States, Europe, Japan and Korea lining up to join the ranks of businesses registering in China.
In the beginning, there were more domestic companies registering. Foreign-owned enterprises would wait and observe the situation. Now the registration of overseas-funded enterprises is outnumbering that of domestic ones.
Other provinces have already benefited from the business reforms. And on March the 1st, the Chinese government announced the rollout of these experimental measures, making them accessible to provinces across the country.
The pilot reform in Guangxi Zhuang Autonomous Region started in January the 24th. Since the pilot, industrial and commercial registration had increased 107%. It's really remarkable. I think the initial purpose of the reforms has been achieved, which was to stimulate the market and make it convenient for people to start a business.
DBS Bank, Singapore's biggest commercial bank, was among the first foreign banks to set up offices within the zone. Supervisor Chen DeLong says since then they've snagged many opportunities.
It took us only 3 months to get qualification and start operation in January the 7th. The open environment and quick process in the zone tells us what the free trade really means.
Chen says implementing the reforms to their banking practices and products will take time. In the meantime, he says they're being kept busy advising potential investors.
We have done a very good job in trade financing. We hope to bring our experiences to the trade zone and help the investors design their financing projects and expand their trade service. Besides, we are looking forward for further detailed reforms in the zone, such as the liberalization of interest rates and internationalization of RMB. We want to provide relevant services to our customers under these big reform themes.
The new business registration measures join other moves to further liberalize interest rates and moves towards yuan convertibility. This week, China's Premier Li Keqiang announced the setting up of a deposit insurance system, considered a prerequisite for freeing deposit rates and liberalizing interest rates. Within Shanghai, China's central bank has removed interest rate ceilings on smaller foreign currency deposits in the zone. Experts say the move marks the full liberalization of interest rates on foreign currency deposits within the zone. And companies set up in the zone can now borrow offshore yuan without the previous restraints. The move will accelerate the process of yuan convertibility. One thing's for sure, the financial reforms are being watched closely by global investors keen to extend their reach into China.
We're watching with interest the Shanghai Free Trade Zone. We see that as a bit of an experiment to see how far the markets can be opened up, and we're sure if this works, we're going to see further opening up of the markets. We'd like to see more scope for foreign financial institutions operating in China. Chinese banks and insurance companies are very welcome in London, and we think that British companies can make a good contribution to the development of the financial system in China.